Hello everybody, Brian here at quantlabs.net. It's 1 a.m. Saturday the 28th of May. Really important article that just came across. I posted on the quantlabs.info chat server. Here it is. You can see here quant-labs.net. Dutch officials, restrictions on crypto derivatives, are they necessary? Right here. This can be seen right here as it loads up. Crypto News Media .press. Alright, so let's look at at this article. Paul Willem van Gerwen, head of capital markets and transparency supervision at the Dutch Authority for Financial Markets, discussed the risks of cryptocurrency derivative trading, arguing such transactions should be limited to the wholesale market. Alright, right there, that could spread things globally. So if you look at Binance, most of its volume is in the derivatives market. Derivatives market includes futures market, options market. Now, when they say wholesale market, in the U.S., that would be the CME, which currently they do have both Bitcoin and Ethereum futures and option micro contracts. So continuing along, including the tendency for market manipulation and criminal activity. Now, I've said this before, I can't prove it. Well, I can prove it that I do think that Binance was part of facilitating the ability for Russian oligarchs and whoever else to get money out during the initial invasion of Ukraine. I've talked about that in past webinars, so I do believe that has happened. As proof, they've implicated and allowed it to happen. So, offer evidence that the country should join the United Kingdom in banning retail access to options and futures of digital assets. So once again, coming off of the Davos, the little guy, me and you, are not able to get access to these contracts because that's where the wealth in the future will be built. We can get access, thankfully, on the CME, but again, I don't know how much of a factor that is. Also, I've talked about if you want to safely protect your trading, Grayscale is the option to go through. I do believe that retail cryptocurrency exchanges like Coinbase, Binance are up to no good. Kraken seems to be okay still. Okay, so here's a speech. In a speech, I maintain that the trade in crypto derivatives should be restricted to wholesale trade. The elite stays the elite. 1% continues to collect, but the little people don't have an opportunity. It will gain power to propose such restrictions on cryptocurrency markets thanks to the markets and crypto asset regulations. So this could go right across the EU. Oh, wonderful bureaucrats they are, looking out for the little people. And as they said also that there was a mention of UK as well. I mean, the US, this could happen in the US, Asia, wherever else. I think this will go global. I would submit that the Van Gerwen is zeroing in on the wrong focal point. I agree with that. Focusing on the risk, it makes more sense to explore the benefits of crypto derivatives. Agree with that. Once you understand the benefits, there's one becomes a simple solution. Regulate with an aim to mitigate the risk rather than banning the activity altogether. I agree with that. Benefits, in fact, are varied in many. Limit risk. Consider derivative trading requires utilization of arbitrage necessary to certify the valuation of assets is accurate. Further, many use derivatives to diminish the risk of fluctuating in individual asset prices. I'm just coming off of witness how that's done between a perpetual and a current expected price of a crypto. Retail investors, that's us, see significant savings on low transaction fees. I'll give Binance that, but there's no point if you can't win on those trades. Bearing fees associated with derivatives against those garnered through the spot trading, there is significant upside to the former. Problem will many regulatory bodies is that they see what it is, or worse, what has been, while failing to see what it could be. Now again, when you get the old farts on the Senate, the Congress, that don't even understand what Bitcoin is, or let alone what a crypto is, this is a lost cause. It's a losing game. It will probably happen. Answer the vexing regulatory problem of crypto derivatives. Leave yesterday behind us, focus on tomorrow. It's time for derivative exchanges to turn their focus on building technology stack that can mitigate many of the risks. Long though of a societally harmful, the time for action is now and is urgent. Blah, 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 blah. But think about it. This could be the next domain that they will control. Not just in the stable coin. Meanwhile, you can trade fiat currency on Kraken with proof of reserve. If they crash, they can cover the customer's funds. I mean, that's what it was a while back. And Kraken's the only exchange that does that. So here, I'm not going to go on about it, but you can get it in my article. In the link below this video. Alright, so something to think about. If you like this video, you want to know how to do your own private banking, watch this 2-hour video. Lots of benefit. quantlabs.net/banking is where you go. Thanks for watching. Have a good day.